Welcome to 2025 California Tax Legislation Update, Key Enactments and Conformity Developments. I'm Philip Behren, Chair of the BHBA Taxation Law Section. The tax section is sponsored by Hochman Salk and Torsha Perez, BC. The Hochman Salk and Torsha Perez, BC advantage is experience and eye for innovation and genuine dedication to clients, their families, and their business. In addition to their national practice in civil tax and criminal tax controversy, and related litigation in federal and state courts, the firm is also active and successful in handling non-tax matters such as business and estate planning for high net worth individuals and closely held businesses, together with white-collar defense. I'm delighted to introduce our speakers for the first panel this year, Colin Grinnell and Haley Summers. Colin is the chief consultant to the California State Senate Revenue and Taxation Committee, where he oversees policy analysis and legislative strategy on state matters or state tax matters. He previously served as executive staff director for the California State Senate Governance and Finance Committee, providing senior leadership to complex fiscal and local government issues. Haley is a consultant with the California State Senate Revenue and Taxation Committee, where they advise on personal income tax, corporate tax, tax credits, and voluntary contribution funds. They bring a strong background in tax policy, legal research, and public service, informed by their experience in legislative consulting and legal clinics. Haley earned their JD from University of Pacific McGeorge School of Law. Haley, Colin, please take it from here.
Thank you very much, Philip. Thank you for the kind invitation to speak to this group today, as well as the very kind introductions. Once again, my name is Colin Grinnell. I'm joined by my colleague Haley Summers. We are the your staff in the state legislature with regards to tax issues. We have a presentation for you today that will be in 4 parts. Haley, would you like to start the show?
Absolutely. In one moment. All right. Thumbs up from Colin if I'm successfully sharing that presentation.
You are. And so in addition to being a very talented tax expert, Haley is also the IT department here at Senate Revenue and Tax. And so we run a shoestring operation. So want to go to the next slide. We'll take you through the 4 parts. First of which we had exciting developments last year with regards to state tax conformity. That'll be the first part of the presentation that I will take you through. I will then turn it over to Haley for before I turn it over to Haley, I'll talk a little bit about the revenue overview for California this year and talk about some of the property tax legislation from last year. Then I will turn it over to Haley for other measures of significance that the committee worked on in 2025. Before we leave, we'll look a little bit ahead into next year, what might be on the legislature's plate in 2026. And then with any time remaining, we'd be happy to take your questions and answer them to the best of our ability. Next slide, please. And so as practitioners, I think a lot of the things here on this slide will be things you probably already know, but I think they kind of set the table for the legislature's effort last year with regards to date change conformity. And so California's income tax system applies to all the resident income regardless of source, as well as California's source income of non-residents. And this personal income tax is the primary source of revenue to fund the state's public services, everything from K through 14 education, corrections, health and human services, and the myriad of other kinds of things that the state delivers both directly and through other service providers like counties and nonprofit organizations. These are, you fill out a state tax return, you fill out a federal tax return. They generally do it right around the same time, but these are very different systems in a lot of ways. And so there are key differences between them. The biggest difference between the two systems is that, unfortunately here in California, we do not have a money printer in the basement. And so we have a constitutional balanced budget requirement. And so at least in theory, the spending side of the ledger needs to balance with the expenditure side of the ledger. And then also with regards to our tax system, as a state, we are bound by federal case law in ways in which the federal government is not. And so as we start to get into the two systems, keep in mind that both the fiscal and legal differences between these two systems. Conformity is the effort by which we try to align the federal and state tax systems to the maximum extent practical, given these limitations and differences. It is the hope that tax filing, tax compliance, tax administration can be as simple and straightforward as possible. I don't have to tell this room that that's not always the case, but to the extent that these systems work in alignment with each other, definitions for the same things are the same. Items of income are treated the same way. Then this is better for pretty much everybody. With that said, conformity is both a policy and fiscal exercise. And so these administrative equities, these administrative goals can often be subsumed by policy and fiscal issues. And we'll talk about that a little bit more on the next slide. And I don't think it's any mystery that, the state of California and the federal government are going to disagree on tax policy issues. They do it all the time, and that is probably as old as the state itself. Next slide, Haley. Thank you. And so the way our income tax, works for the most part is by reference to the Internal Revenue Code. So we try to use the same definitions, rules, and calculations, for state purposes as we do for federal purposes. And this is true in pretty much every state that has an income tax. However, there are you can probably put states that have income taxes into three distinct buckets for how they go about these conformity issues. The first of which is rolling or automatic conformity, where whenever the Congress changes the Internal Revenue Code, this is automatically integrated into state tax systems. You may have seen some of these issues popping up in various states. With regards to H.R. 1, various provisions that were in that being automatically conformed to in several states. States then can decouple if they want to. That can often be a political process in each state. And given the nature of H.R. 1 or OB3, you have seen states with that where H.R. 1 caused immediate fiscal problems from them that had to be factored into their budgets right away. And then you've seen states then go in to affirmatively decouple from some of those provisions that by virtue of being a rolling conformity state, they automatically conform to. Here in California, we are not an automatic conformity state. There are many reasons for that. There are constitutional restrictions, fiscal policy, and that, as I talked about in the last slide, a little bit of natural push and pull on tax policy between federal and state governments. There will be disagreements, and so the California has always reserved its right to conform to the changes that it wants and discard the ones that it doesn't want. And the mechanism by which we do that is through what we call the conformity date. And so you will see one date in the personal income tax in RNT 17024.5. And there's also corporation tax sections that work directly by reference. And when you look at those sections, they will basically say that the Internal Revenue Code, as of a specified date, applies in the state of California except as otherwise provided. And then you'll see a whole lot of statute that is the except as otherwise provided part. And so when we move that date forward, we pick up changes in the Internal Revenue Code where the state has already affirmatively conformed to those sections of the Internal Revenue Code. Talk a little bit more about the mechanics of that on the next slide. But I think the long story short is that when that date moves, we pick up things unless we say we don't. And then, of course, there's other states where they don't use date change or automatic conformity. They kind of selectively conform either by section or by public law number. A little bit of history before I get into some of the more technical stuff. So up until 1983, the state had its own kind of standalone personal income tax. We had our own definitions, dates, all kinds of things that operated independently as a legal matter from the Internal Revenue Code. This caused significant friction for taxpayers, for Franchise Tax Board. And so in 1983, there was an effort that sought to reduce or potentially eliminate that standalone nature. And it resulted in basically a repeal of half of the content of our personal income tax with a replacement with references to federal law. Here the classic example here is instead of having our own definition of what income is or is not, we point to Section 61 and then modify it from there to count the things that we want as income and not to count the things that we don't want as income, in the state of California. And then we, kind of fix that date in the personal income tax and parts of the corporation tax. So that whenever we move that date forward and we conform to something like Section 61, we pick all those things up without having to mention them all specifically in the code. And so this is a process that worked pretty well up until the late 90s. Conformity legislation was done pretty much every year. This process then began to slow into the 2000s. Reasons for that, are kind of myriad, increasing political difficulties, fiscal challenges between federal and state governments. And so we kind of slowed down to about an every 5-year process. The last conformity date we had before last year was January 1st of 2015. So we had gone 10 full years without, generally conforming to all of those federal changes. Then Assemblymember Ting authored AB 154, which represented the last conformity date of January 1, 2015. So in the last 10 years, we had picked up a lot of the two systems grew apart in all kinds of ways. There were selective conformity efforts. I think when we were doing the list, probably between 10 and 12 individually enacted, state statutes that conform to individual things. Partnership audits. There was a large effort spearheaded by Governor Newsom in 2018 to pick up specific aspects of the Tax Cuts and Jobs Act to fund an enhanced state earned income tax credit and young child tax credit. And then also individual efforts over in the early part of this decade to conform to treatment of some of the COVID assistance programs and the tax treatment of those items, and that is probably about half of the ones that we've done. With that said, we had selective conformity to very specific aspects, but general conformity hadn't been done in 10 years. Next slide. And so, kind of how does this process work on a step-by-step basis? And so the first step, of course, is Congress changes the Internal Revenue Code. And so, we keep a close eye on Congress. Specifically, the Franchise Tax Board each year publishes a document known as the Summary of Federal Income Tax Changes. For those of you who love acronyms, we call that the SFITSE. And so this comes out generally every year that summarizes the changes that Congress made to the Internal Revenue Code in the previous year. So you look at those individual public law changes, and then you look through the Revenue and Taxation Code and look to see, does California either specifically conform to that section, or does it do what we colloquially call block conformity? So, specific, chapters, subchapters, subtitles of the Internal Revenue Code apply. And so when that is the case, then when you move that date change forward, then we automatically conform to those changes. If we do not want to do that, then there has to be individual statute that says we do not want to do that, or we want to do so in a modified way. And so over that 10-year period, we had heard from lots of advocates, CLA, Caltax, many others. Franchise Tax Board is an administrative matter, that this nonconformity on a lot of these items was making life harder for for practitioners and as an administrative matter. And then tax conformity has not been a high priority for the legislature in the past, and we can get into the reasons for that on the next slide. And so, when we get asked, why hasn't the state conformed to, why is that date all the way stuck in the past back in 2015? Why haven't we conformed to this, that, or the other thing? This slide is meant to answer those questions. I think the first and primary, barrier is that unlike usual statutes that can be enacted by the legislature by majority vote and signature of the governor, anything that is tax conformity is going to trigger a 2/3 vote as a tax increase per the California Constitution. Proposition 13 is modified by Proposition 26. Which literally says any change in state statute that results in any taxpayer paying a higher tax is a 2/3 vote in each house. And so that makes, increases the degree of difficulty in terms of securing the votes on each floor for, to secure passage of an omnibus conformity measure. And tax policy, as we all know, is partisan. It is political. And in the last 10 years, we had a lot of federal changes. It will not, be a surprise when I say that Democratic members of the legislature did not want to conform to a lot of aspects of the Tax Cuts and Jobs Act, and Republican members of the legislature weren't so keen on adopting a lot of the measures that were in the IRA, Consolidated Appropriations Act, and the CARES Act as well. The next degree of difficulty is fiscal. As I mentioned previously, the state does not have a ability to print its own currency. And so, when conformity is desired, that's a great thing, but it is unlikely to be enacted if it's going to result in general fund revenue losses. Conformity is great, but when you want to cut aid to schools or other kinds of state priorities, it is not nearly as important as those other things in the view of the legislature. On the other side of that coin is that the constituency for tax conformity, for the most part, are taxpayers, large and small, and their practitioners. And so these groups, they like conformity. It makes life easier for them, at least in theory. However, they are not going to sign on if the goal of the project is to raise revenue for other programs. And so it's a very delicate balance between generating enough revenue that it survives the fiscal process here in the legislature and secures a governor's signature, but doesn't raise too much where it is perceived to be a revenue-raising exercise. I don't have to tell this group that tax conformity is a very dense subject matter. It is not easily to lend itself to a quick bill presentation or a press release or a great narrative story about why a bill is going to make the world a better place. And so when speaking to legislators, legislative staff about conformity, you can cover a myriad of very dense and complex tax issues. In the conformity bill that we worked on, there were more than 1,000 substantive changes that the state conformed to. And so having an understanding and being able to explain each specific change is not easily done. But that is kind of how omnibus conformity works. And so all these things have to be, are conformed to by virtue of that date change. And so, you have to kind of tackle that, subject denseness, which a lot of legislators, don't want to do because they have other ways they want to spend their time and resources. Next slide, please. And so as Haley and I took on this process of state conformity, we kind of had to come up with some default rules when we went through these more than 1,000 substantive changes that the state had not conformed to in the 10 intervening years since AB 154. So we started kind of with the easiest rule that there were. So, if we currently conform, we should probably keep conforming. That would make things, as practical as they could be, and be the least surprising to taxpayers, practitioners, and franchise tax board. If we haven't conformed to it in the past, we probably shouldn't either, because for what I just said, trying to keep the administration as easy as possible. There are exceptions, as there is in most tax laws. I think the most notable one was California has the base research credit. We had conformed to the federal alternative incremental research credit in the past, but we had not conformed to the alternative simplified credit since that had been brought in. There had been efforts in the past by individual legislators. The Franchise Tax Board had sponsored a legislative proposal. This was something that was important to the state's technology companies. So we made the decision to basically enact that proposal to change, to enact the alternative simplified credit as an alternative to the base credit, and then repeal the alternative incremental research credit, which didn't apply for federal purposes anyway. And so hopefully that will make compliance and the incentive effect of the research credit better for California taxpayers. The other thing was during the 2018 effort that Governor Newsom spearheaded, the 1031 limitation on real property was not fully conformed to for state purposes. There was an income threshold where if your income was below a certain threshold, you could continue. Actually, we were still required to make 1031 exchanges for property other than real property. So, Professor Annette Nellen at San Jose State had written very clearly about what a taxpayer compliance and administrative burden failing to fully conform to that 1031 limitation had been. So that was incorporated as well. Kind of the rest of the slide goes into a few more of the rules. Trying to have some of the increases from Tax Cuts and Jobs Act generate the revenue by which there were decreases on for individual taxpayers. Given the coalition that we had with California Taxpayers Association, they saw, I think, the benefit of conformity outweighing some of those individual business increases, and also legislators, were not, thrilled to increase individual taxes, and so there's, kind of hardly any provisions of 711 that ended up doing that. We also left out some of the really significant changes TCGA made for individuals, miscellaneous itemized deductions, the increased standard mortgage interest and things. Those were larger policy decisions that the federal government made that there wasn't a lot of appetite for at the state level. And, as a matter of trying to balance together all of these changes and their fiscal implications, just became beyond the scope of the project. Other items that would have generated significant opposition, conformity to guilty, now necktie, the minimum book income tax would have resulted in significant opposition from the business community. Also, with the exception of the 1031 limitation where the legislature had previously selectively conformed, we let that be, as well as items where the legislature had considered proposals to conform, most notably with regard to health savings accounts, where we've seen, many proposals over the years that have not been enacted. We let those sleeping dogs lie. And so that kind of goes, kind of summarizes the rules that we applied when we were deciding the contents of SB 711. Next slide, please. And so the legislative strategy was to be as transparent as possible. So we published all these tentative decisions that were based on the rules that I just previously discussed and on our website. We sent invitations and comment to everybody that we could find. We emphasized that these changes were bipartisan in nature, and that HR 1, which was enacted in the middle of SB 711's consideration, none of those items were included in SB 711 as they were enacted after its revised conformity date of January 1, 2025. We also had to make specific amendments along the way to address individual opposition, such as the 451B change for credit card companies who argued that they'd already been subject to 2 state tax increases in as many years and really didn't want a third. We also built a great coalition of groups that really cared about conformity. So as I mentioned before, Caltax, the Society of Enrolled Agents, the Society of CPAs, Spidell Publishing, Silicon Valley Leadership Group. Their representatives went and spoke to members and their staff about the importance of conformity. They also sent emails and made phone calls to legislators that weren't really sure what a general conformity bill was, and it really helped with the effort. And then Haley and I meeting with anyone and everyone as soon as we could to address any concerns with the proposal. And then we had a great author in Senator Jerry McNerney, the chair of Senate Revenue and Taxation Committee, and a great principal witness, Gina Rodriguez, not appearing on behalf of her employer, but as in her personal capacity as the person, I think maybe the only person who's worked on conformity issues longer than I have around here. And she was able to come to the committee to really, both the Assembly and Senate policy committees to emphasize the importance of conformity from a practitioner point of view. Next slide, please. And so, this is a little bit of more kind of summarization of what we conformed to and what we didn't. I think I covered most of this, so I think we can kind of go on to the next slide. And so the good news here is that the governor signed SB 711 on October 1st of last year. Our new conformity date is now January 1 of 2025. There's cleanup legislation that we are currently working on. As a matter of that complexity, there's always going to be a little bit of cleanup on the other side. And so we are currently working on that. But that is basically the story of how legislative conformity came to be in 2025.
All right, so we are 28 minutes into our session, and now we're going to shift into a quick look at revenue overview by the state, and then we'll move into our legislative updates. And we'll have Colin cover the property tax legislative updates. That is his scope of expertise. And then we will, lightning round, get into those other legislative tax areas and hopefully have some time for question and answers at the end.
All right, so a little bit of quick revenue overview. So when, to finance state government, we have basically 3 major revenue sources: the corporation tax, personal income tax, and sales and use tax. And you can see here kind of the general revenue composition, at least for the 24-25 year, as well as the estimates that were built in 2025-2026. The personal income tax revenue, comprises a huge amount of the general fund. It is also highly volatile. And I'm sure an issue that this group is very familiar with, the elective pass-through entity tax, that has shifted revenue from the personal income tax bucket where you would have paid, when the pass-through made a distribution to its owners and shareholders. That now shows up on the corporation tax side as the entity making the payment on that behalf. And so, to the extent we keep elective PTE, which is currently in place at least for the next few years. And we'll be interested to see how it changes given the higher cap on deductibility under federal law. The sales tax is a little bit different in that is kind of a split revenue effort between the state but about half of it also goes to local governments as well. Local governments can also, with voter approval, increase the sales tax in their area. The base rate in the state is 7.25%, but can get as high as 11.25% based on those voter approved rates. You may have seen some press on this in the last few days, but the Legislative Analyst's Office, so kind of the legislature's budget advisor, anticipates the revenues are actually in pretty good shape despite some of our economic trends. And this is largely due to enthusiasm around artificial intelligence, which has resulted in high stock market valuations, which becomes the basis for compensation for a lot of the state's technology workers. And so, somewhat counterintuitively, revenue is doing above trend. It doesn't mean we don't have a budget problem, but revenue at least is above trend. Our next slide. And so, as I don't need to remind this group of the devastating fires that occurred in Los Angeles in early January, right around this time last year. When those fires occurred, the legislature sprang into action with 3 distinct bills. These were all relating on property tax issues. A lot of the income tax treatment is kind of automatic at this point with casualty losses and other kinds of things. There were 3 measures the legislature advanced that were enacted last year, extending the deadline for reconstruction on the same lot to have kind of a bright line test with regards to valuation to be able to continue having the base year value of the destroyed home. So normally you'd have to do that reconstruction within 5 years to have that 120% of value safe harbor to keep the previous base year value. Given the difficulties with reconstruction, the legislature prospectively or preemptively extended that to 8 years. For SB 293, this was just, mostly as a result of a lot of the families in Altadena that were multi-generational, where there might not have been a properly recorded change in ownership. When disasters strike, assessors usually discover those unrecorded changes in ownership. And while they're recording decline in value, they're legally required to then also apply those changes in ownership when the previous owner was deceased retroactively up to 8 years back, which can take a family that had lost everything and then send them a huge new property tax bill. And so we were able to fashion a way to extend the current deadline under Prop 19 for intergenerational transfers for eligible taxpayers who were able to then acquire ownership of the property within 3 years of getting that supplemental assessment. And then SB 663 had a number of different provisions, some identical to AB 245, others with regards to the welfare exemption, to make sure that welfare exempt entities don't lose their exemption because their properties were destroyed and could no longer be used for their exempt purpose, as well as a few administrative matters. I will stop talking now and turn it over to my colleague Haley to talk about the other things the legislature did in 2025.
Awesome. We'll save your voice a little bit, give you a chance to recover. All right, so we have already covered some of the most relevant stuff that we hoped was important to your practice. We covered the conformity updates already, and we covered the property tax bills that really were important for helping recover in the LA fires. But we've also are going to cover other subject areas of state tax law, as we know that you are practicing in many different areas of law. The legislative updates that we are covering will not cover all of the legislative updates that we saw this year. If you do want a more comprehensive list of tax law notable bills, our committee publishes a greatest hits list on our website. So if you wanted to get a link to explore any of these bills in more in depth, please go to our website and find the PDF that links to these. This first slide that we're going to get into here covers the income tax provisions in last year's budget bill. Now, the budget bill does not go through the tax policy committee, but there are a number of provisions in the tax budget bill statutes that were enacted that were initially policy bills that were in our committee that we got to weigh in on. In this year's budget bill, we saw a few notable exclusions enacted. The first one being a gross income exclusion for retirement pay and benefits paid by the DoD to survivors of the spouses for those who have been veterans in the military. There's an AGI cap for this, so it's not for all households. It is up to $20,000 for individuals, and it's capped at $125K or $250K for those filing jointly. Another exclusion that we saw enacted in the budget bill was related to wildfires. We often see settlement payments be made to victims of wildfire in the state. In the past, we saw one-off bills that would name specific settlements from specific fires. This would be a broader one. This would be for settlements 2021 through 2030. This does not conform to the similar federal tax income exclusion that we saw, but this is going to eliminate those one-off exclusions that we had seen in years past. A similar type of exclusion is for payments related to the Chitika Canyon elevated temperature landfill. For those of you who may be familiar, there have been individuals who have been suffering nuisance and respiratory illness related to the landfill event. So this is a similar type of exclusion for those who are being affected by a form of disaster. Some of these other bills or statutes that we're going to cover could be wholesale in and of themselves, so I apologize that we're going to have to get through them with brevity. Another notable provision of the budget bill was the extension of the elective pass-through entity tax from 2026 to 2030. There is also provision related to a prepayment election, but that is also a notable provision that we saw in this budget bill. Another significant one is related to the single sales factor apportionment for financial institutions apportioning their California state income. And this would begin January 1, 2025 or later. Another very big one here is the increase of the film tax credits. Huge package of legislation that we saw this year increases the film tax credits from $33 million up to $750 million. And this would be for fiscal years 2025 through 2030. Many of these bills Colin weighed in on and helped with the details. So please, drop an email if you have questions. I know that these are huge, pieces of legislation, but we're happy to help answer any questions as you may have them.
I only shape the good parts.
Hey, that's what matters, right? Piggybacking off of the budget bill was AB 1138 Burr. We also saw some related provisions to the expanded film tax credits. Other notable income tax bills that we saw this year pertaining to energy, too. First one being SB 254. This would allow a 20% tax credit for 10 years for certain expenditures that a taxpayer incurred related to energy transmission projects. Now, this bill did not come through our committee. It did go through the Energy, Utilities, and Communications Committee. So this is one of the rare bills that have a substantive tax credit or tax provision that we did not hear in our committee. So we would encourage you to also reach out to our colleagues in the energy committees if you have follow-up questions on this as well. Another notable energy income tax bill was SB 302. This is an income exclusion for payments related to the federal clean energy credits. So this would conform state law to federal law pertaining to energy credits in the IRA. So that is an example of selective conformity, as Colin was discussing the different forms of conformity that we use as strategies when conforming state law to federal. Another notable income tax bill pertains to the low-income housing tax credits, AB 480. This removed the requirement that the developer must elect when they are submitting their application to sell their low-income housing tax credits. I think that there were some interesting pros and cons here about, why the law required that election to begin with, but this ultimately will help the low-income housing development credits better serve their purpose. All right, moving into our state and local taxes, sales and use taxes, excise taxes. Another notable piece of expanded legislation was related to CATFA, California Alternative Energy and Advanced Transportation Authority. It's a mouthful, but we go by CATFA for this. This expanded a sales and use tax exclusion for purchases related to fusion energy used as an alternative energy source. So very exciting opportunity to increase our state's commitment to clean energy. Other local taxes that we saw enacted this year related to cannabis and the hemp industry. AB 564 would have delayed an increase in the excise tax rate. And this delayed it until 2028, 2029. That became effective in October. Another bill related to excise taxes in cigarette and tobacco product licenses. We saw an increase in the fees for new or renewed licenses for tobacco, for cigarettes and tobacco licensing products. So this went up from $265 to $450, and by regulation up to $600. These increase in fees will help the CDTFA with their enforcement and administration of the cigarette and tobacco regulations, which is the reason why these fees were increased. And we also saw a number of different transaction and use tax cap exemptions. Encourage you to go look at our greatest hits list to see more examples, but a more notable one is the creation of a transit revenue measure district that would cover specific Bay Area, right, Colin? How many counties? I can't remember exactly how many at the moment, but
I think it was 5 out of the 8, and one was an option, but they're intended to finance transportation infrastructure or transportation services, mostly by the way of BART and San Francisco Muni. with some other transportation operations sprinkled in there as well.
Perfect. So for those counties, they would be authorized to enact a transaction use tax, which is basically your local sales and use tax, above the 2% cap. Current law caps cities and counties in the same jurisdiction from only going up to 2% of a sales tax. So if a city has 1.5%, the county can't come in or any other local government come in and do anything above 5%. So we see these exemption bills come in so that cities and counties don't accidentally lock each other out from the opportunity to impose a local sales and use tax. And rolling into our tax administration bills, this one is kind of actually could have been under our property taxes slide, but AB 418 enacted new notice requirements before a property can be sold in a tax sale. This was a bill aimed to provide more transparency and opportunity for property to be sold at a value that compensates the taxpayer for the actual value of their property. So by enacting a new notice requirement, this is going to provide more transparency and opportunity for that tax sale to recover more money when it goes for sale. Another couple tax administration bills, voluntary contribution funds. I'm not sure that you guys often see these. I know that when you use tax software, you don't often get prompted for these, but if you print out the tax forms, you will see an opportunity to check a box to donate your excess tax refunds to a specific fund. We have a number of these. Some of them expire after a period of time, and we've had a number of new ones created. This year we had a pediatric cancer research fund added to the tax form for people to donate to, and also one for Parkinson's disease research. Because these are charitable contributions, the taxpayer would receive a deduction in the year in which they made the contribution. So it's an opportunity for people to support specific causes with any tax refund that they may have had. And then another tax administration bill that we had this year was AB 1518. This bill allowed non-resident taxpayers who don't have a social security number or an ITIN to file state returns or be included on a group return. There are certain taxpayers that, may have very little business in California. They might not be residents of California or even within the state. They may be foreign residents, but they have business affairs within the United States. Allowing those individuals to file a return allows them to engage in tax compliance and be good taxpayers. So you see this often happen in the case of group returns. So a preparer will prepare tax payments and forms for individuals that are in a group, and they'll be able to participate in filing their taxes on a state level and be compliant. And in that spirit as well, understanding that there are difficulties for these individuals, even though they have a desire to be compliant, there is an authorized exemption for quarterly estimated payments for these non-resident taxpayers. If they are included on a group return, they will not be penalized because the person who prepared the group return made a mistake in that filing. All right, and now we are rounding up into our last 10 minutes here. we'll check in with Philip in a couple minutes, but we'll provide you with a couple updates here on a look ahead for this year. And then if we have some interesting questions, we can field those questions. Colin, did you want to discuss our upcoming bill hearing?
Yes, happy to. So the way that we kind of kick off the year in January of the even numbered year is that there are measures that have been introduced in the first year of the of the 2-year legislative session that can be advanced in the second year. We call them 2-year bills, but they have to be reported out of their House of Origin by the end of January. And so the committee will be considering those bills next Wednesday. Nothing of terrible consequence or significant changes, but we'll hear 5 or 6 of those measures next Wednesday, the 14th. What will be significant this week is that Governor Newsom will present his final budget of his term at some point this week. I think that's going to be on Thursday. And so that will set the stage for the annual budget process where the state enacts its budget for the year and makes other associated policy changes. At least in committee, I think we're going to be looking at a good amount of measures to create incentives, either generally for business or specific kind of businesses, or rewards for certain kinds of taxpayers. We may also see some items that would conform to HR1/OBBA. That's certainly possible this year as well. As income tax receipts come in over the course of the spring, the governor will then make his May revision sometime in early May that kind of reconciles all the actual revenues with the estimates from the previous year and then makes estimates for the budget year, which would be the 26-27 fiscal year. The legislature has to approve that by June 15th, and the governor must sign it by July 1st. Or else state appropriations for the most part are not authorized. With regards to conformity, we do have the personal income tax 163J unintentional conformity, which we're advancing cleanup to decouple from in the coming weeks or month. As I noted, there will also be some individual proposals on selective conformity on HR1 items. And then we're all waiting for that new SFITSE to come out of Franchise Tax Board so that we can get our hands dirty with all the various things that were in HR1/OBBA. And so I think, that's what we know currently of what's going to happen in 26. And so we have, I believe, about 8 minutes to field any questions that you may have. Thanks again, Philip, for the invitation. It's been a real pleasure to speak with you today.
Thank you so much. That was a great presentation. And I can just extend to the audience, if you have any questions, please let us know. In the meantime, are there any tax laws that haven't passed last year that should have passed, or?
There was one that was really significant, I think, probably for this group. SB 799 by Senator Allen. That was the state's False Claims Act has long included a preclusion on cases brought under the Revenue and Taxation Code. It's the same as the case as the same situation as the Federal False Claims Act. We're presuming that the tax enforcement agencies do a good enough of a job where we don't need a kind of a qui tam plaintiff mechanism to otherwise enforce tax law. The Attorney General Bonta had advanced a bill sponsored, it was SB 799, authored by Senator Allen, that would have removed that preclusion for under certain circumstances. And so that was probably the most controversial bill the committee dealt with last year. It was double referred first to the Committee on Judiciary and second to the Committee on Revenue and Taxation. When it went to the Committee on Judiciary, which is chaired by Senator Umberg, the measure succeeded in Senate Judiciary despite a lot of business community opposition. that don't want to spend the time to or have the increased risk of defending these false claim statutes. It then came to the Committee on Revenue and Taxation, where it failed passage, but was granted reconsideration. And so that measure was then amended to embrace a different subject yesterday and be referred to a different committee. Of course, it could be reintroduced in the second year of the cycle, but I think that was, at least of the very consequential measures of interest to this group, that was one that I think that was very significant.
And given the elections this year, do you expect a calmer year, or?
I do not expect a calm year. Yeah. I think a lot depends on the budget situation. I think that's kind of first and foremost. And we'll find out a little bit more about that this week when the governor presents their budget. And then the legislature begins its consideration of the governor's budget. As we like to say around here, the governor proposes, the legislature disposes. And so we will be going through that, subcommittee and budget committee process in the spring. There's also at least two very notable initiatives. As legislative staff, there's not a lot we can say about initiatives, but I think there's what's called colloquially the Taxpayer Protection Act, which is brought by Howard Jarvis Taxpayers Association, California Business Roundtable, that would kind of take those definitions that I previously spoke about in the Constitution that kind of applies the 2/3 legislative vote and voter approval for local taxes, and kind of increases the stringency of those requirements by modifying the definition of what is a tax and what is not a tax. And so I know that is a proposal that is receiving a lot of attention. And then, of course, you can't kind of go a day following much news without hearing a discussion of the Billionaire Surcharge Act, which is also at the Attorney General's Office for Title and Summary. As that measure either receives signatures to secure its place in the ballot or not, we are paying close attention. But I think if that were to qualify, there'd be a heck of a campaign, and a rather significant impact if it were to be approved by voters.
And I understand if you can't comment on that, but any legislation forthcoming on digital assets? I've seen that last year there were passed a number of crypto-related laws like unclaimed property, etc. Any tax law changes to that regard? Federal government plans some.
Haley is our in-house alternative asset guru, so I'll let them answer that question.
Thanks, Colin. We do see something in this line over on the assembly side right now, right? And so we'll see where that lands. But the question does come up a lot, right? We've seen it come up in discussions last year. The sales and use tax base in California is still particular to tangible personal property. And we've seen a lot of other states expand their tax base by including software and other digital goods. And they've done that through a few different ways. Some ways by just adding intangibles to their sales and use tax, in other states by reinterpreting tangible personal property as digital things being perceivable to the census, which has provided a foundation for expanding the sales and use tax to those previously understood as intangible things, but things that are in fact perceivable to the census. So, what we will see in terms of the appetite to explore that form of revenue raising is yet to be seen. But it is undoubtable that when you look at the revenue numbers, that the sales and use tax revenues have remained relatively constant, despite the increased economic activity in the state and inflationary pressures. So I think that we'll continue to see more significant discussions around that particular topic.
And I see you have answered the only question so far about the greatest hits of tax changes. So yeah, I think we are about the hour. So I would leave any parting word to you guys if you want to say anything, and then we can close for today.
Yeah, happy to. Thanks again, Philip, for the very kind invitation. It's been a pleasure to speak to the group today. As you mentioned before, we are your legislative staff here with regards to tax issues. If we can be of service, our contact information was on the front of the presentation, and I'm sure you can find our emails quite easily. Thanks again for having us, and we wish you the best and a happy new year.
Thank you so much for being here. It was great.
Thanks, Philip.
You all.
Bye.